Well, hello and welcome to Halftime Report. Well, halfway through the trading session, the Nifty is holding mildly in the green. Sustenance of this performance is going to be crucial after the kind of drubbing that we saw in yesterday's trading session. For the next 1 hour rod, I'm Nigel D'Souza, and with me is Lata Venkatesh. Lata, it's good to see some green. We're outperforming the other Asian markets. But yesterday we were underperforming, so that could be the reason. Yeah,
we're just compensating perhaps. It's still too early to blow the whistle that stability has returned. We have seen whipsawing. Actually, the intraday is hiding the actual volatility, which has been as much as 400 points. At the bottom, we went all the way to 9,020, at the top 9,400. That's extremely difficult for any trader. So while it may look like there's green, I don't know how many people are making money out there.
Absolutely. And if you look at the advanced decline ratio as well, you're seeing at the start of the trading session, you had more number of stocks that were declining. The crisscross lines actually should come up for you numerous times. They have, they're moved into each other. If you could get the advanced decline ratio up for you on the screen. Currently, you have more number of stocks that are declining than the number of stocks that are advancing. Well, later on the show, we'll do a quick check in terms of how the options data is panning out. But first up, let's run you through all the top stories. Wild swings on the Wall Street as the Nifty seesaws in a 400-point range. Asian markets, too, are very volatile in trade.
YES Bank rallies 50% as the moratorium lifts tomorrow. The Reserve Bank Governor assures depositors, also tells state governments there is no need to withdraw deposits from private banks. Moody's upgrades rating on YES Bank's long-term currency issuer status.
And Vedanta calls for abolishing the 22% buyback tax, says it will encourage companies who have confidence to buy back their shares. They also add that it will be a huge morale booster.
And crude recovers after crashing to below $30 a barrel yesterday, while precious metal prices plummet again as panic in financial markets abounds. Weak industrial demand and China data also weigh on commodities.
And Z is under pressure as the ED issues fresh summons with respect to loans given by YES Bank, Subhash Chandra and the SL Group to appear tomorrow. Asian Paints gains on the back of the sharp fall that we have seen in crude oil prices. Well, let's get straight to our movers and shakers segment then, and let's start off with the biggest mover over the last few trading sessions. That's YES Bank. Well, Lata, we're seeing a big move. There's a technical factor as well that's playing out there, but give us the news flow.
Oh, yes. No ignoring the technical factor, because nothing in the fundamental factors will account for a 58% change in the stock price. But nevertheless, the fundamental factors are the way in which the Reserve Bank governor put his weight, or rather put the regulator's weight behind the depositors of YES Bank yesterday. And to quote him, the governor said no need for depositors of YES Bank to panic and resort to panic withdrawal. Your money is safe. Those were his very words, and that was, of course, important for the shareholders as well, that the bank will be protected. As well, Moody's upgraded some of the bonds of the long-term issuer status from CAA1. They upgraded to CAA1 from CAA3. This upgrade, the rating agency said, was because of the reconstruction scheme, and because they now think that with the coming in of capital, the status of the long-term bonds is the credibility and the creditworthiness of the long-term bonds is very high. Now, to the technical factors, we have to give more importance, because what the Reserve Bank did in the reconstruction scheme is that it overnight announced that 75% of the shareholding of the shareholders as on March 12th will not be available for sale. They will be locked in for 3 years. So what's happening is all those shares that were sold even on Thursday and Friday are not being delivered. It's taking time. The clearing corporation has not been able to deliver those shares. So there's lack of liquidity. As well, even shares purchased on Monday are likely not to be entering the demat accounts up until tomorrow or day after. So it's taking time for shares to come in, because there's not enough floating shares. Remember, the total issued capital was 255 crore shares. I'm counting even the promoter's shares. That's not usually bought and sold, but nevertheless, from the 255 crore, only 65 crore shares are now available for sale, and therefore trades are not getting executed, which explains why you have such a high price jump. It is a thin volume, a lack of availability kind of trade.
Okay, all right. Lata, thanks so much for explaining that one to us. Well, Mangalam joins us on the phone line to tell us about the impact of the coronavirus on what good impact it could have on Titan and how Jubilant Foodworks as well is adjusting in these times. Mangalam.
Well, we start with Jubilant Foodworks itself. Well, the stock is under pressure today, and it has been in the last few trading sessions as well, down from almost levels 2,000 to 1,400 odd. Tough times do call for innovative measures, and the company has introduced zero contact delivery in India only. This means that you pay online. The delivery person keeps the pizza outside your door, moves to a safe distance. You open the door, take it without coming in any physical contact with the delivery person itself. As a result of which, maybe the street believes that there could be some bit of delivery, and especially the fact that people are working from home. CLSA says that delivery volumes, particularly in the West and South, have increased sharply, even as dine-in volumes have crashed. And even other apps, the likes of Swiggy, Zomato. Swiggy, in fact, has doubled their delivery radius to about 10 odd kilometers. For Jubilant and Westlife in particular, delivery accounts for about 50 and 30% respectively. So more delivery volumes coming in terms of pizza for Jubilant Foodworks itself. The stock has seen a bit of a correcting a little bit more, but will be interesting to see people do go ahead and call for the zero contact delivery. As far as Titan is concerned, the demand has been definitely hit hard as consumers have pulled back on spending in the upcoming wedding season. And more than just the wedding season jewelry, also the postponement of weddings has impacted or is likely to impact gift-related purchases. So that is what CLSA's on-ground report is. They estimate 20 to 25% of the company's sale coming in from wedding-related jewelry sales and gifting as well. And that stock too has corrected about 30% from the peak of close to around 1,400 odd.
Well, point taken, the market is deflating and therefore people are finding excuses to sell marquee stocks. I don't think people are not going to get married. At the most, marriage parties may be postponed. And even if they are held on a very small scale, I'm sure jewelry will be bought. I mean, my father bought jewelry for me, and he did not give it to me because the marriage ceremony was scaled down. But I think these are excuses to bring down the stock price, which is falling because overall there is a top-down, bargain sale, I would think. Okay, with that, we go to the next set of stocks under focus. Nimesh is joining us with a very interesting report put out by Morgan Stanley on IT companies. Nimesh, IT companies could be impacted by a possible global recession?
Yes, Lata. So that's exactly what Morgan Stanley is saying, that they see risk to the Indian IT, large cap Indian IT companies in terms of lower global growth and dislocation in some verticals which Indian ITs are into. So they've lowered down their the overall for the industry. They've lowered down their estimates to inline now, and they've downgraded the estimates of a lot of the large cap Indian IT companies. To start with, they've cut down the target price of TCS to 1925 from 2100 levels. For Infosys, target price gets cut down to 750 levels from 900 levels, and so is the case with HCL Tech. The target now is 525 versus 700. For Wipro, the target price is now 195 versus the earlier target of 240. And for Tech Mahindra, the target price gets cut down to 755 versus the earlier estimate of 865. So largely on back of low global growth and some pain in few verticals like travel and tourism, they've cut down the EPS estimates for most of the large cap Indian IT names.
All right, Nimesh, I was going through a couple of sales notes on ITS since I track some part of that now. And they said in 2008-9, the valuations came down all the way to around 10 times. Obviously, I wasn't tracking the markets very actively at that point of time. So maybe some pain, and that's...
Okay, well, you're going to get more on that from Nimesh, and I'm telling you that's a wonderful link, even if it's a bit stomach churning, but later. For the moment, we go to the next...
Yeah, let's go to Ekta. Ekta joins us now to tell us about Ipca Laboratories. Ekta?
Well, Ipca Labs is in focus because there's an IDFC note which has come out. It says that the last few days, doctors have suggested an anti-malarial drug, chloroquine phosphate, as a potential treatment for COVID-19. Now, according to the IDFC note, more than 10 clinical trials are underway in China to test the efficacy of this particular drug. Now, Ipca comes into focus because it is one of the Indian companies which is one of the primary API manufacturers of this drug. And chloroquine is also exempted for the US when it comes to IPCA supplies. Remember, IPCA's got 3 plants under the regulatory scanner when it comes to the US FDA, but this is one of the exempted APIs which they can supply to the US, so it's positive news for them. Separately, NATCO is also one of the active suppliers in the US market when it comes to the US formulation of chloroquine. So if in case there is some sort of efficacy in the drug for COVID-19, then maybe there could be some amount of positive for them.
Okay, I never thought that we will be grateful to quinine of all things for bringing some green on this screen. Thank you very much. And of course, for bringing some relief to patients as well. Thank you very much for that, Ekta. Let's get to Anisha. She has a bunch of stocks on her radar. Anisha.
Hi Lata, good afternoon. Let me start with crude sensitives because after the 10% dip that we saw in crude prices overnight, these stocks are rallying. Case in point being Berger Paints as well as Pidilite. Remember, it's a weak market, but nonetheless, Pidilite has been touching record high levels time and again. Apart from that, I'm also watching out for Z Entertainment. That stock was coming under pressure, down about 10%. Remember, the ET has actually issued fresh summons with respect to loans given by YES Bank, and in that matter, Naresh Goyal of Jet Airways and Subhash Chandra of Z Entertainment have also been asked to appear on March 18th, and on account of that stock is perhaps seeing a tad bit of downtick. And lastly, you guys talked about a lot of pharma names. They're usually outperforming, but the stock today which is underperforming is Alembic Pharma. US FDA actually closed inspection at one of the units and issued establishment inspection report. So let's see what happens with this month, but as of now, the stock is underperforming just about 2% as compared to the likes of Sun Pharma, Aurobindo Pharma, etc., which are up anywhere between 6 to 8%.
Okay, all right, Anisha, thanks so much for joining and filling us in with all those stocks in focus. Well, let's do a quick recap then of all the stocks we just covered. We have YES Bank, Titan, Jubilant FoodWorks, Ipca Laboratories, TCS, Infosys, HCL Tech, Wipro, Tech Mahindra, Pidilite, Berger Paints, Z, and finally, Alembic Pharma. Well, on that note, we'll slip into a short break. On the other side, reports indicate that private labs could be allowed to test for the coronavirus. We'll get chatting with Mr. Villumini of Thyrocare. Stay with us.